Good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders. Let's go through Aftermarket Monday to see what the last partial week in August will hold for us. Kind of interesting. I don't know if you got to read the Art and Science of Active Trend Trading last night. We posted that to the blog and talking a little bit about how August is not disappointed. It has lived up to its historical precedent of being one of the most volatile months of the year. We saw that in the report we did last night. The objective of Market Monday is to provide a very quick timely, actionable intel at the beginning of each week. Then we'll see if that intel basically, takes shape throughout the year to provide throughout the week to give us a potential entry opportunity. Of course, our premium members get the triggers via text alerts and all that kind of stuff. And so we do a real quick market review, stocks and ETFs setting up, what else and what we're focusing on. Remember, have patience, stand back, and respect the rhythm. So stocks and ETFs setting up for August 28th. The question I have right now is, okay, do we sell into strength or do we sell the reactive moves up? That's the big question. Why? Partly because September tends to be the poorest performing month of the year. And when you throw all that together, what we're looking at is to be in a position for the bounce that tends to happen in October. So we want to be very much prepared for that. So seasonal expectations with September and August. August met its expectations. Larger volatility than the other months, and so it met its part of the bargain. Now will September do the same and give us a nice pullback into our bounce area for October? Is there time for gold? Gold caught a bid today. If you're going to trade gold, trade it now on the pullbacks, and I'll give you one indication of a pullback that we can do with gold. Then Netflix, NVDA, YY, Tesla, Cruise, and LABU are some of the entities that we're looking at. Remember, there is no holy grail of trading, only tools and rules. So let's get into, and I'll come back to that in a moment. And so let's get in there and look at the individual and I'm going to go ahead and leave the hour chart up here. But let's take a look at the spiders first. Okay, spiders, we get kind of a lot on last week. It's working within a downtrending channel. We got close to the top of the channel last Friday. We get basically a gap up this morning and then a sell-off into the body from last week. We did find support at the 244 level. We'd spoken about that on the SPX, that we were looking for, about the 240 level, somewhere around there, which would actually be down here. But we found support about here, and it's got a bounce. So we kind of have mixed signals. Long tail at the top for where the sellers came in. Long tail at the bottom where the buyers came in. How do we basically wind up for the start of the week? Well, as you can see here, more or less a little bit of a downside candle, but from a new high. Are we ready to jump right in to try to buy the spiders? No, I'm not. I like the Qs better. And I actually have and as you can see, the Qs have worked themselves, and on the hourly chart, you can see they've worked them back up into the 38.2 to 618 fib retracement from, this past high of this week. Let's get out of that real quick, remove drawing. And as you can see, it's just macinating around the 820 combo and finding support at the 50. Where might we bounce from there? If support at the 50 holds, we could anticipate a bounce back up. It too is stuck in a downtrending channel and may be stuck in a downtrending channel until it takes out the high, this high here from the August 16th. IWM, IWM has not rebounded as much, but it's kind of interesting. We did get a really nice bounce on IWM down here at the support level at the 134 level. Actually, we got into a trade on TNA on this for the early warning alert, guys, down here on the 18th, around the 21st or the 18th. We jumped into a trade there. It's doing okay, but it's approaching some overhead resistance at the at the 20-day moving average, the 100-day moving average, and the 50-day moving average, but it looks like it's trying to at least make a little bit of a bid to move back on up. How am I trading this? Just to let you know, on the position I have open, I will let me whip over to TNA just real quick, because TNA is one of those that we want to keep our eye on also. The way I'll be looking at that is, okay, as you saw, I moved my trailing stop up to just below Friday's low of candle, and I will basically do the same thing today. I will move up my stop loss just below today's low. So in other words, I'll put it at about 10 cents below it, because we've got a nice little a little bit over 5% gain on this entity. We don't want to basically lose all of that, so we'll move the stop loss up. And if I take out, these moving averages, then I'll be looking to basically close the position with somewhere between an 8 and a 10% gain. So, but I'll be watching it really close when it gets up into that 52.40, 52.30 level, because I need it to get all the way to around 52.99 to actually pull in the 8%. So that's what we're looking at for TNA. What are some of those other entities we're looking at? As you can see, I'm looking at YY. YY is finding support, but it is putting a lower high. And so if this support breaks, it's probably going to go on down past the 50 to the bottom of the Keltner channel and the moving average envelope. 65, this past breakout at 65 is a good level of support, and below that we've got $61. But I think that YY, with the Chinese stocks showing some strength here of late, may give us an opportunity to do something with that going into the end of the year. But YY looks interesting, hasn't reversed yet. TSI hasn't ticked back up, but on an intraday chart, it's looking like it's getting ready. How much is it going to run? Who knows? I mean, it is basically broken down below the 50 period on the 1 hour chart, which of course is the 8 period on the daily chart. Okay, NVDA. Based on NVDA's how it started off the year on the IBD 50 chart list, number 1, came off the list, came back on the list, and is now, looks like it's in a nice little uptrend, back in a nice uptrend. I want to be long on NVDA, but I want to take it off of a smart area. As you can see, this little congestion area that we're seeing in here, very low below average volume. And so as it's building a new base, and we want to see if it's going to break out of that. On the intraday chart, not a lot to say, hey, let's get into a position right now. And so we'll see. I'm just basically biding my time on this one, kind of waiting for a better signal off of the daily charts. Netflix, another one. I want some exposure to the FANGs. I really like Netflix. Okay, Netflix is held up here at the 165 area. Okay, the support zone. You get a little bit of a tick up on the TSI, but it squeezes back down, get a little bit more of a tick up. Now we have some positive divergence in the TSI. So we're getting a little bit of a cluster here on the market forecast on a daily basis, 2-line cluster on a weekly basis. And so we have a downtrend, short-term downtrend. As soon as that's broken, as it moves back above the 8, or if we get some support down here around the 165.70 level, that may be the trigger to say, hey, let's go ahead and get long on Netflix. Again, we can do that via either a option and or buying the stock outright. Did we cover YY? I think we did. Maybe we didn't. YY, okay, yeah, we did cover it. YY, similar type thing. Tesla. Tesla not really reversing a downtrend. Thus, while it is a hammer, it's not a reversal hammer. But we are finding support at the 50, which is at the 243 area. We've got a kind of a double line support down here off this trend line, support here off this trend line based on the closing body there and the low here. So what's going to happen with Tesla? Is it going to break on back above this? We'll see. Again, low volume on this consolidation, and so it hasn't kicked into shape yet. However, longer term, it's just doing a typical pullback into the moving averages, and the trend on Tesla is still up. Cruise. I'm watching Cruise. Cruise is in, after a huge sell-off, basically a capitulation type sell-off. It has found support down here at the 54 level, and now it's trying to build its way back up, as you can see here on the daily basis. However, low volume, nothing to get excited about. It did try to break out 4 days ago on a higher volume, hasn't made it yet. So we need to, it looks like it's bouncing between 54 and 56. As the 8-day moving average bends back up, we can look for a potential move back at least to the, maybe to the 200 or maybe to the 100-day moving average or the 50-day moving average, as it works on pulling together a new base to bounce off of. Again, I'm not in Cruise right now, but I'm just keeping my eye on it. LABU. Got a good move on the biotechs today. Typically, this month is not supposed to be a good month for the biotechs, but as you can see, we've taken off in the last 1, 2, 3, 4, 5, 6 days. It's run all the way from the TSI tick up the bottom of the lower Keltner channels up to the top of the Keltner channels on fairly good volume, growing volume. So how do I want to look to play this? Well, look to play it as either a pullback into the moving averages, the 820 combo, and or to this breakout area. And we got a couple of breakout areas. One at the 6682 area, which is, and that's when this would become interesting to me, is getting back to the 6682 area right there, which is about that high there. It's actually 6670. We'll mod that real quick. 6670. There we go. Okay, so if these price action here get below the 6670 level or two of them, that may provide a bounce up from there. You could also take it down to 65 as a potential bounce area also, which is right here at these past highs here. So both those are break areas to keep your eye on for potential move later in the week. Take a look at IBB, which is the non-leveraged index for the ETF for this. And you can see it is, it's building a nice little cup thing going on here. And nice gap up this morning. Last but not least, let's talk about GDX. Okay, look at gold. The gold miners has broken out up to the longer term trend line, and it did it really fast. It just tends to do this. Keep an eye on, if we're looking at playing gold, we want to look at these potential pullbacks. Okay, here's a breakout area about the 2380 level. That's where we want to put an alert to say if it pulls back down to there or into the 820 combo, because we're getting very positive moves here on the moving averages. Everything's getting geared to the upside. Pull back to the 2380 would be a potential opportunity to get in a trade on either GDX, but we're going to be looking to trade Nugget And Nugget will have a similar type situation, and I think this is the same. I'll have to go back here and look real quick. I think this is, since this is a 3 times, so the 3644 level. Let's take a look back at GDX real quick to make sure I'm taking it off the same candlestick. And this is from the 6th. I'm not. This is from the 6th. And that's one of the areas where you have the which is right there. The reason this is, there's the 6th, and so the reason this is offset is because of the contango that we see with Nugget, between Nugget and NDX. So one can take the trade-off of NDX, or GDX, excuse me, GDX, and it will sync up here with Nugget. So that move, is basically based on this one, and Nugget hasn't even made it back into that area there yet. But they'll take the, so again, overbought, 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 and so looking for a pullback down into midsection of this big candle, or down into the 820 combo, or the 820 combo, have to catch up with it. So that's what I'm looking at on Nugget to be able to participate in the rest of the rally there. So I think I have covered in short order, about 15 minutes, everything that we're looking at for the week. And I hope that is beneficial to everyone. I have time for like one quick question. And so, yeah, contango or backwardation, Bob, is basically when the entity, they have it a lot in like future contract for oil and all that kind of stuff. And what it is where the because they have to keep trading out contracts to simulate the movement of a daily entity, there's a tendency for it to lose value over the short term, and so that's why you can buy one of these 3-time leveraged entities, and if the underlying is either not moving, or even if it is moving, because that contango, the 3-time leverage ETF can basically lose money. Look up on Investopedia, and they have a really good definition and goes into a lot more detail on what contango and backwardation is. So, okay, my friends, hey, feel free anytime, shoot me an email, or even call me. Just give me a call and we'll answer whatever question we can. So with that, I'm going to call it a day. Have a great week. We look forward to be in position and set up going into October. God bless everybody. Hi traders, this is Dennis. Don't miss this opportunity to become a premium member at a 40% discount, good through Labor Day. That's this coming Monday. Just look for the icon that drops down from the YouTube channel video. Bye-bye.